Hey, have you been wondering what's happening with the real estate market in Huntsville? I'm going to take a look back at May in this video, so check it out. What's up, guys? My name is Brandon Taylor with Capstone Realty, and today I'm doing my monthly market recap, looking back at the month of May and how we compare to previous months and last year. And we're also going to look at the daily statistics to see if we see any change in the trends for looking forward, to try to predict what might happen in these really uncertain times. So first off, this whole market recap, I have a blog up. So if you want to look at the stats and dive into the charts a little more, you can check out my blog. I'll put the link comments down below. And it lets you interact with the charts and whatnot a little more than you can on this video. But what we do when we do a market recap, we look at the supply and demand to understand the market. And so first we're going to check out supply, then we'll check out demand, then we'll kind of look at the combination of those and what that's doing to impact ultimately what we all care about, which is the price that we have to pay for a house. So we'll start by looking at supply. The most basic metric for supply is just the number of houses that are for sale. So this chart shows us the last 3 years of supply. You can see it started in January of 17 through today, and there is a definite trend down and to the right. We've had a decrease in supply pretty consistently for the past 3 years, and we are reaching an all-time low of 995 homes on the market. It's a moment in time though, right? Because that constantly changes. There's new listings put up constantly. And so that was a moment in time, but they have a consistent moment in time. That's their methodology. But we hit a low, an all-time low, and it's down 11.2% from last month and 26.7% from last year. The next thing we talk about supply is how much new supply we're getting. What is the rate of increase for new listings? And that's this chart right here. So we see for the last 3 years, there's a definite seasonality to new listings. See the consistent rise in the spring and fall and drop in the fall. This year, unsurprisingly, there has been a consistent rise, and it was actually, the rise started earlier than in past years. January and February had a bigger rise than normal, all the way through the March rise, which was an all-new high for the number of listings. But April and May have had a decrease, which is not normal. It doesn't fit the pattern. The pattern is for it to stay high throughout April and May. So that decrease, though, has made it where we had 806 new listings, which is down 7.5% from last month and 7.8% from last year. In a year where the economists were predicting a huge real estate market in January, to be down is significant. With prices being as high as they are, it seems like sellers should be motivated. But obviously the coronavirus and all the stay-at-home orders and stuff like that has slowed the number of listings. The last thing we can look at supply side is the number of new listings, but look at it daily to see if there's any trend recently or throughout the month that may indicate some change. So this chart right here is the number of new listings every day for the past 2 months. So we're looking at both April and May in this chart. And then there's 3 lines on there. That's the 7-day, 14-day, and 28-day moving averages. Looking at the chart though, I don't see a ton of trends that are notable. Like I think it stayed pretty steady throughout the month. At the beginning of May, we were at, the 28-day was 27.6, and at the end of the month, we're at 25.9. So there's a slight decrease in the number of listings. There's spikes. You can look at there's some spikes on the last day of the month, the first day of the month, and the 15th of the month. And that has a lot to do with new builds. So new construction, they list in batches. They put a whole bunch of new ones up at the same time, or some of the builders in town do. And so that's why you see some of those spikes. And so if this chart went on to June 1st or 2nd, you'd probably see another spike as well. You would. I looked at the data. But honestly, it stayed pretty steady. It hadn't had a big increase. And honestly, I kind of thought it would. I thought when we had the safer at home order change and some of the rules for social distancing change, my phone has started ringing, and I've been busier personally. And so I thought that was going to be across the market, but I'm not sure if maybe there's a little bit of a lag. And so maybe it'll be 3 weeks, 4 weeks later that we'll start seeing the listings come up. I know in my business, that's kind of how it is. I have several listings coming up that haven't hit the market yet. And I didn't have those necessarily at the beginning of May. So now that's all that we have to talk about on the supply side. So let's talk a little bit about demand. So demand is interesting because you can't directly measure how many potential buyers there are. All we can measure are how many people are putting how many houses are going under contract and how many houses are closing. So we'll start with closings because it is the ultimate, right, is when the transaction actually happens. And so we want to look at closings, but I will put the aside that this is a pretty significant lag from when it happens, right? Because it's 30 to 60 days from when they put a contract on a house until it closes. And so the closing numbers are really reflecting 30 or 60 days ago demand level rather than the current market. But you can see in May we had an uptick from April. It went up 7.9% since last month, but is down 5.3% from last year. This does seem pretty significant in my mind because we were expecting such a big increase in sales this year at the beginning of the year. So as we know, the coronavirus has impacted everything, and it includes people's willingness to list, which I will go into later, but that is the constraint on our market right now. Pending sales are also another good indicator of demand, and it's a little bit more recent because pending sales in the month, that says who currently is putting contracts on a house. We don't know things like price, and some percentage of these won't close. I think it's a 10% or so, maybe almost 15% where they don't make it through escrow for whatever reason. But that being said, we did hit a new record for the past 3 years. We hit the highest number with 844 houses pending in the month of May. That's a 14.6% increase since last month and a 9.4% increase since last year. I personally am not surprised. It seems like with the social distancing decreasing that there are a lot more buyers going out and snatching up those homes. And so that makes sense to me. Looking at it from a daily metric, we do see that there's an increase throughout the month of May. So take a look at this. We started the month at 22.5 and we ended at 24. So 1.5 more homes a day are going under contract on average by the end of the month. I also noticed that there wasn't a big lull. If you look at the 7-day moving average, you see that it stays between, it never went below 20, so there wasn't a significant decrease, and then it never went above 30, so there wasn't any spike really. So the 7 days stayed pretty steady throughout the month. The last thing we look at for demand is the average number of days on market. This tells us, how hot the market is based on how quickly houses are going under contract on average. And you can see also it's a 3-year statistic, and we're looking at it over time, and we are still at a low. We have hit the low of 27 days on the market as the average. This is a very low number, especially when you consider that there's things like model homes that stay on the market for 2 or 3 years sometimes in that number. If we look at the median, I think it's close to 13 or something like that. I don't have the number in front of me, but so half the homes are on the market less than 2 weeks. So it's a very short time on market, a very active market from a demand perspective. So now we have a couple of ratios we look at to talk about the combination of supply and demand. The first one is inventory or absorption rate or months of supply, as the chart says. And this is a simple ratio of how many houses are on the market divided by how many homes we sold last month. And that gives us a number of months of inventory, how long it would take us to sell through our current inventory. And the number, once again, hits a low for the past 3 years. We are at 1.4 months of inventory. And 1.4, to give you some context, is a very strong seller's market. If we are looking at a neutral market where buyers and sellers don't have an advantage over one another in the market, we're looking at 6 months of inventory. So we would need 4 times as many listings as we have to reach a point where buyers and sellers are on even footing. So it's a very strong seller's market. Next, we want to look at the daily metric too. I think this is valuable to look at. It is just I call it the net. It's how many we gained each day or lost each day. And so this is just how many new listings minus however many went pending that day. And we look throughout the month, there's a couple of spikes. We mentioned a spike of listing on the 1st, a spike of listing on the 15th. And one thing I found interesting is immediately after these spikes in listings, there's a spike in pendings, right? You see that the 3 days after the 15th, there was significant numbers of pendings. Then there was a little bit of a ramp up the 27th, 28th, and 29th. And then there was a significant spike in pendings on the 31st. And I think that's interesting. I think it just shows what I'm about to say for my conclusions, which are that we are supply constrained. And so when there's an increase in supply, we see an increase in the demand metrics, because the demand is there. It's just pent up demand. It's sitting on the sidelines waiting for the right house to come. So finally, we're going to talk about kind of the so what information. So price is the ultimate measure of the market, right? In what direction the price is moving is saying if we are increasing, if your value, if your home is increasing, if you're going to pay more if you buy. And so that's what we're most interested in. And price has definitely continued to increase. If you look at the 3-year metric here, we see that the low inventory with the high demand has increased prices across the board. We're looking at the median sales price here for the past 3 years. We are up to $240,000 as a median price. That is an increase over both last year. And it's a little bit flat from last month, which isn't real surprising month to month because of just the low inventory and just kind of the uncertainty in the environment. And the ultimate so what is, so what should I recommend for buyers, sellers, and investors? So for buyers right now, I think being aggressive and patient are the two things. I've mentioned this, I think, in the past couple of videos I've done, that aggressiveness means being willing to go a little bit over the comps if you want to win, because it's likely that that's what the market would require. Prices are increasing, we're in an appreciating market, so something 6 months ago could be 3% lower than what it's worth today. For a seller's perspective, same kind of thing. It's fine to be aggressive in pricing your home. You don't want to be crazy though, because things still will sit if they aren't priced right. And so, but that's the right strategy to take right now, is to be aggressive in it. And I think pre-listing marketing is very important. Us getting the word out to other agents and potential buyers before we list your house is important because it's moving so fast. And investors right now, I think it's hard to find, I called it easy money in the blog. Like, there aren't a lot of deals just to snatch up that are sitting out there on the market because people are snatching them up. You have to be willing to put in the work and do some value adds and do some renovations and things like that to find value. There's still deals out there. A lot of them are being done off market, which gives opportunities for those who have those kind of relationships. All right, so that's what I got for the market recap. Looking forward a little bit, this is always the scary part because who knows what's happening. My prediction, this is a prediction, so I want to caveat that a lot because I don't know what's going to happen. But my prediction is that the pent-up demand, that there's also pent-up sellers. There are people who were planning to sell this spring who kind of took a wait-and-see approach. I know some personally, so I've got some anecdotal evidence to support that. But I think there are pent-up sellers. And so I think this summer we will see an increase in listings throughout June and into July. And I also think our kind of prime market time is going to be different this year. If you look at the past number of closed sales chart, if you look at the past number of closed sales chart, there's a very much a seasonality to it. There's a buying season, if you will, for each of the past 3 years. And I think this year we're going to see that season kind of be delayed until June, July. And then I think it's likely that you'll see it last more like through October or November, just because it's going to take that long for the pent-up demand it's going to take that long for the pent-up demand to be satisfied, maybe longer even. I think this winter is also likely to not see the lows that we've seen the last couple of years. It'll dip, it always does, but this year I think it won't dip as far, and it'll start earlier next spring as well. And I think it's all going to be driven by how many listings we get. I think the market is going to buy however many listings we can generate at this point that are at prices that are fair. So that's my prediction for the rest of the year. I'll keep doing these videos every month and give you updates as we go through to see what we see. Thanks a lot, guys. Hope you have a great one. If you need any help, give me a call at 256-617-3975. If you have anything that I said wrong or you have questions about, let me know in the comments or in a DM or a text or a tweet or whatever. Let me know, guys. Have a great one.